Negative gearing is a term that describes a situation where an investor borrows money to buy an asset, such as a property or shares, and the income from that asset is less than the expenses associated with it, such as interest payments and maintenance costs. This means that the investor is making a loss on their investment, which they can deduct from their other income, such as salary and wages, to reduce their taxable income and pay less tax. This is consistent with the principle that people pay tax on their net income, not their gross income. Negative gearing can apply to any type of investment, not just property, but it is most commonly used by property investors in Australia. According to the latest data from the Australian Taxation Office, in 2018-19, there were over 1.8 million property investors who reported rental income, and around 1.2 million of them reported a net rental loss. This means that about 2/3 of property investors were negatively geared. The main reason why property investors use negative gearing is to benefit from capital gains. Capital gains are the increase in the value of an asset over time. For example, if an investor buys a property for $500,000 and sells it for $600,000, they have made a capital gain of $100. Property investors hope that the capital gain they make when they sell their property will be more than the losses they incur along the way from negative gearing. Capital gains are also taxed at a lower rate than other income in Australia. If an asset is held for more than 12 months before it is sold, only 50% of the capital gain is included in the taxable income of the investor. This means that an investor who makes a capital gain of $100,000 on a property they held for more than a year will only pay tax on $50,000 of that gain. Negative gearing has been a part of the Australian tax system since at least the 1930s, and it has been a controversial political issue for decades. Supporters of negative gearing argue that it encourages investment, stimulates economic activity, increases housing supply and affordability, and allows ordinary Australians to build wealth through property. Critics of negative gearing argue that it inflates house prices, distorts the housing market, reduces tax revenue, favors wealthy investors over first-home buyers and renters, and contributes to inequality and social problems. In recent years, some political parties have proposed to reform or abolish negative gearing and reduce the capital gains tax discount to make the tax system fairer and more efficient. However, these proposals have faced strong opposition from the property industry and some segments of the public who fear that such changes would reduce their wealth, lower their incomes, or crash the housing market. Negative gearing is a tax strategy that allows property investors to deduct the expenses of owning an investment property from their taxable income. This reduces their tax liability and can make a loss-making property more attractive in the long term. However, negative gearing also depends on the level of land tax that investors have to pay. Land tax is a state-based tax that is levied on the value of land, excluding the buildings and improvements on it. Land tax rates vary across states and territories, and some properties are exempt from land tax, such as the family home. In May 2023, the Victorian government announced a series of land tax hikes as part of its budget measures to repay the debt incurred during the pandemic. The land tax changes are expected to affect about 860,000 property investors in Victoria, including about 300,000 who use negative gearing. The land tax hikes will increase the annual cost of holding an investment property in Victoria by up to $2,975 for properties worth over $1.8 million. The new land tax rates will come into effect from January. So how will this affect property investors who use negative gearing? There are two main implications. First, the higher land tax will reduce the net rental income of negatively geared properties, which means that investors will have to bear a larger loss each year. This could make some properties less viable or profitable in the long run, especially if capital growth is low or negative. Second, the higher land tax may be partly or fully deductible from the federal income tax system, depending on the individual circumstances of each investor. This could reduce the impact of the land tax hikes on the overall tax position of negatively geared investors. The Victorian Premier Daniel Andrews has encouraged property investors who use negative gearing to claim the land tax hikes as deductions through the federal tax system, if they are legally entitled to do so.